Folks, Dan Frio here with your opening bell for July 16th, 2025. So what we've been waiting for all this week, we've been waiting for the inflation numbers. When are tariffs actually going to be a part of our inflation? So yesterday we got consumer inflation. I'll recap that again for you here in a minute. And then today we got producer inflation. We thought that was going to basically jump up because of tariffs and everything else that's going on. But there was a revision today, and we got some breaking news on the producer inflation numbers and how those are going to affect these things over here, folks. So my name is Dan Frio. I do this report twice a day to inform you guys what's going on with those and the whys behind it. Right now, I want to go take it over to CNBC for some breaking news on producer inflation. So I'm going to go to Rick Santelli. When we come back from this, I'm going to show you how the markets are reacting to this. Looks like a Goldilocks day so far, folks. So let's get over to it. Rick, take it away for me, buddy.
Welcome back to Squawk Box. Rick Santelli here, live at CME HQ with inflation data, wholesale inflation data, breaking news for the month of June. PPI comes in unchanged. We're expecting up 0.2. Unchanged would be the smallest inflationary wholesale increase in it since it was minus 0.1 in March of this year. Strip out food and energy, it remains zero. Unchanged, zero. And that would comp towards April when we were minus 0.2, which, by the way, was lowest inflation rate going all the way back to April of 2020. If we strip out food, energy, and trade, unchanged. That also would comp towards April of this year. Now, let's take a bigger view, year over year. Year over year headline, expected 2.5, comes in 0.2 light, 2.3%. That would be the lightest in the Wayback Machine going to September of last year. If we strip out food and energy, up 2.6, a tenth light, and that is 0.4 less than the rear view mirror, which was up 3%. That 2.6, well, we have to go back to July of last year, 1 year, and that was 2.6. Find a lower number, you're in April of 24. And finally, the year over year, ex food, X energy, X trade, 2.5%, 0.2 lighter than 2.7, 2.5, Wayback Machine, you're equally where we were in November of 23. To find a lower number, you're in February of 21. Now, that is all very good news. These numbers are less than expectations. They're sequentially less. However, if you look at revisions, that changes things. The revisions are coming through on a month-over-month data. So last month, we had up 0.1 on month-over-month, all three metrics. The headline, ex-food and energy, and trade. Those have all moved higher. Up 0.3 on headline, 0.4 on core, and 0.1 ex-food, energy, and trade. So we could debate that there was a hump there, but no matter how you slice it, these numbers are better than expected, although the wholesale side isn't getting the same horsepower these types of numbers would have got on the consumer side. Yesterday, interest rates are moving around a bit to the downside, but hovering very close to where they were. We're at 447 and a 10. We're now at 446. 446 is down a couple of basis points. The pre-opening equities like the number as they make new Dow future highs.
Okay, so I'm not going to let him steal my thunder at this point. So that's what we got is news. So let's get over and recap this real quick. So here's what we've seen over the last 2 days. And the reason for this is we're trying to figure out how tariffs, everybody said tariffs are going to skyrocket inflation. When are they finally going to creep into these numbers? So today we got producer inflation on the producer side. That's where you would think it would get first. And then it would float over to the consumer side. So yesterday when we got the consumer number, I'm like, okay, but I'm going to wait for the producer numbers. Let's go over these numbers. So today, here's what we got. Core PPI, month over month, was previously revised to 0.4. They expected it to go, this was 0.1. They were expecting it to go up to 0.2. It was flat, zero. Okay, that's month over month on June on the core. We have month over month on the PPI was 0.3 was revision. It was supposed to go again to 0.2. It was zero. So if we have month over month revisions on core and PPI from last month to this month, no signs of tariffs yet in this number. So are they going to be is incremental as a lot of the markets think? Well, that's what we're going to have to ponder at this point. Production right now. Look at production. It's actually up. We were at zero. Now we're up 0.3. Not nothing to really write home about, but production year over year was at 0.66 at 0.73. So I'm going to take this as a complete win for the day. So let's get over to the breaking news that we have right now. So what's this doing to the bond market? Well, bonds are up 13 ticks. It's picking back up what we gave back yesterday. So let's see where we are. Yesterday, we were all the way up here. Remember I said we should be at 99.38? Well, we hit there and then we just plummeted from there. That wasn't good news. Again, when you're watching my show, what you have to focus in on is this rate through here. Okay, this isn't it's a bond, but it doesn't react like a bond. So because up through here, here's what you're seeing. Most bonds, you're going to see something like this. It's going to give you the yield. Okay, so the 10-year Treasury is 4.45 right now. So if you go over to the bonds on the mortgage side of the equation, it's 99. So what is that? Well, I say actually the price of the bond. So how to understand this, if the price of the bond is going down like we saw yesterday, mortgage rates would go up like we've seen right through here. But now what we're seeing through here is that prices are going up. That means rates are going to come down. So we're going to come down a little bit today, or we're going to be back to where we were yesterday. Let's see. Now we had a yesterday high right here, 99.35. We're going to have to pick up about 30 basis points. Could we get there? Yeah, we could get there. I think we're going to be flat a little bit throughout the markets. The opening bell yesterday, what happened is with good CPI numbers, the market did the same thing, but then crashed throughout the day. Look right through here. Here's what the market did yesterday on a good CPI number. It went up and then it gave all that money back. What's happening today? Are we going to have the same thing? Well, I'll be back at the closing bell to let you know what happens. But so far, so good in the bond market. Let's go to the equity markets. Wow. Across the board, it's up. It's green, green, green. We got the Dow, the S&P, and the NASDAQ all up. We have oil down. Fantastic. It's at $65, guys. We need 65 and lower. And then we got the 10-year Treasury also down. Let's see what crypto's doing just for kicks. 118. Yikes. If you want to see how what Bitcoin is and how to invest it, I have a live event I did yesterday. Check that out. You're going to learn a little bit on that. And then again, the bond market, or oil is going down, and the bond markets are looking fantastic as well. So let's recap it a little bit. Yesterday, we got the CPI numbers. It was a little bit inflated. We had 2.8 to 2.9 on core CPI month year over year. That's what really shocked the market. They're like, okay, they were expecting 3, but it came at 2.9. Not as good as we were hoping, I guess, but a little better than expectations. So the market kind of sold off a little bit yesterday, but today markets are looking good so far as we're seeing through there. So that's what we're seeing. Let's get over and see what the markets are telling us in regards to what the Federal Reserve might be doing at the next meeting. So the Federal Reserve is meeting 2 weeks from today. They're going to tell us what they're going to do. Unless something catastrophic happens, like I don't think we're having a jobs report or anything else like that between here and then, so I don't really think their minds are going to be changed. So there is no change going to be in this meeting. So the July 30th meeting, when the Fed meets, probably nothing going to happen there. There's a 97% chance that they won't do anything. But at the next meeting, now that's when everybody's saying they're going to cut rates. But don't fall for this. Don't hold off on your mortgage refinance, because what happened last September? Okay, what happened last September, the numbers were coming in just like this. The Federal Reserve come in and they cut 50 basis points. 50 basis points. Pretty much the most they've cut in decades. What happened to mortgage rates? Well, they went from 6.2 on that day they cut to 7.2 within a week. So don't hold on just for what's going on with a lot of this stuff. You have to really pay attention to where mortgage rates are going. And if you really want to focus in on that, just stay tuned on my channel every day, morning and afternoon, and I'll give you the opening bell and the closing bell. And the reason why I do this, folks, is I'm actually a federally licensed mortgage loan officer. What that means is I'm licensed in all 50 states as well as Puerto Rico. So nowhere out there can I not help you. That was double negatives. Put it this way, anywhere out there in the country as well as Puerto Rico, I can help you. I've been doing this for over 35 years. Put my expertise to work for you guys. How you find out more about me? We do have a slogan here. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, basically, I work at a federal bank. That's what I do. That's what gives me my federal license. The very cool thing about our bank is, what are you looking for when you're trying to get approved for a mortgage? Not just the approval. You're out there shopping for rates and fees and all that stuff. So what do? You've been told get 3, 4 quotes. Well, why not just use our system right through here? We're going to give you up to 33 quotes. And here's how it works. My bank, or our federal bank, is set up with 33 other lenders. We're able to use their systems. We're able to use their services, their rates, their programs, even programs like this. One of the lenders has a $7,000 down payment assistance program. See if you qualify for this, and you use our services to do all this. If you're looking to refinance, check out our refinance tab right through here. It's going to tell you if you missed that refinance opportunity last time because you started looking at rates and then all of a sudden they pop back up, don't miss it again. You can click the refinance button right through here and tell me what rate you're looking to refinance if the rate hits there. And I'll make sure to reach out to you at that time when the rate hits you, and I'll get that paperwork started and we'll get you locked in and get you squared away. But if you're out there right now shopping, here's what I need you to do. Go to the loan estimate tab. I don't care if you have 1, 2, 3 quotes right now. Pick your best quote and upload your loan estimate in here. All I ask you to do is put it in here. And I'm going to ask you this. If we beat this, please use our services, because that's the intent of this services, is not to help you find a better rate and then go back to your current company and have them negotiate the rate with you. Tell them to give you your best shot out of the gate. And if we beat it, please use our services. That's what it's here for. So visit me at therateupdate.com and you're going to find all these tools and more. But like I said, my name is Dan Frio. I'll be back later today to give you what's happened in the market close for the day. I'm anticipating rates to get down to about 6.8, maybe a little bit lower today. So let's see how that goes. So take care. Have a fantastic afternoon. And I'll see you about 4 o'clock at the closing bell. Thanks for watching. Bye-bye.